Nvidia stock is up 152% since January of this year. So if you had invested $50 in Nvidia on January 1st, 2024, you would have about $125 or so by now. As the earnings season has wrapped up with most of the mega cap earnings, Nvidia earning is coming up on 8/28, which is about 8 days from the time of this recording. Generally during this time, investors often ask the question, should we buy the stock before the earnings report or should we buy it after the earnings report? So in today's video, we are going to tackle that question, whether we should invest in Nvidia before the earnings or wait for a pullback and then invest after the earnings. So if you end up enjoying the video, make sure you give us a like, share it with your friends and family, and without further ado, let's dive in. Nvidia has been on a complete tear since the last couple years. So if you had invested in Nvidia 5 years ago, you would be up over 3,000%, and similar crazy numbers you can see with 10 years, as well as if you had invested from the beginning, you would be up about some 300,000%. So it's crazy numbers. Keep in mind, Nvidia also reported a split earlier this year, and that's the reason why we see these numbers are mostly after split numbers, just in case you were wondering. At this point in time, Nvidia's stock price is pretty much near its 52-week high. The high was $140 post-split, and the current forward EPS for Nvidia is 2.73 with a forward PE of 45.70. This is a particular number that a lot of analysts are talking about, that it is still cheap to buy Nvidia at these prices. The reason is because there's a lot of growth. The primary reason for the growth is the data center investment or capex investment that is being put by these large Mag 7 companies. So companies like Meta, Microsoft, Google, they are spending millions and billions of dollars into the capex in the coming years during this AI revolution. Nvidia reported its last quarter earnings on 5/22. They beat their EPS by 5 cents and they beat their revenue by $1.48 billion. Yes, you heard that right, $1 billion. Next upcoming earnings, their target is about 64 cents in the EPS, and the revenue is supposed to be about 28.54 billion, which is going to be, of course, an upside from what they reported last time. I always like to look at the earnings history, especially it gives you a very good idea on how the company has performed. And generally, the big companies, the large companies, they are very good at managing their earnings expectation, and that's why the reason they do a lot of beats. Since the data of 2020, there's only one time they missed on the EPS. Couple times they came in line, but look at the revenue. Every single time they have beaten their revenue, and from the last 4 quarters or so, they have been beating their revenues in multi-billion dollars, 2.42, 2.01, 1.56, 1.48. So if this trend continues, we can probably see another beat by 1.3 or 1.2 billion dollars. That is the real question. If they are not able to beat the revenue by a wide margin, so for example, let's say they beat the revenue by $500,000 and they don't hit the $1 billion, we could see some weakness in the stock price, or at least the immediate short-term impact on the stock price. Keep this in mind that no matter which company it is, you cannot keep sustaining a $2+ billion surprise every single quarter. Now I'm assuming that you are looking to invest in Nvidia for a long term, and this is the current projection of their revenue for the next couple of years. So 2025 Jan, we are expected to have about a 97% growth rate. Total revenue they'll bring is about $120. That jumps to 166 in 2026, up to a 38%. Then we go up to 189, which is a 13.86, and then so on and so forth. So you can clearly see that we still have some room left, at least until a good 2026, where we will still see very high double digits of growth. Their revenue has jumped from all the way from 7.6 billion in 2022 January to 26 billion in April of 2024. This is remarkable for such a large company, and you can see a similar trend in the gross profit. Gross profit is also up, and you can see a similar trend in the net profit here. You look at the net income here, this has been up phenomenally. It was $3 billion in Jan 2022, it is $14.8 billion. A similar trend can be seen in the total current asset. We were around the $28 billion in 2022. We are up to $53.72 billion in current asset, and the current liabilities, you will be looking at about 15 billion. So they are pretty much in green. On the long-term assets, they are $77 billion of long-term assets, and then on the liability they're about $27 billion in long-term liability. So in both cases, this company is in solid green. They have more assets in the current as well as long versus their expenses and liabilities. Now, if you do research on Seeking Alpha or similar sites, you would see that there is a lot of opinions about analysis on whether you should buy Nvidia or not. You can see there are articles like some folks are on buy, some folks are on hold, some folks are on strong sell. From my perspective, it is my personal opinion, so take it with a grain of salt. I think it is a long-term investment. You buy and you hold your investment for a long term, and you will see massive upside. From a Wall Street perspective, we have a very, very strong buy rating from them. We have about 44 strong buys, 11 buy, and only 4 hold with 0 sells, which means that from institutional money or smart money, they are looking to invest more into Nvidia, because as we talked about from an earnings projection standpoint, we still have 100% growth in the next 2025 and about good 40% growth for the following year. So you have about a 2-year runtime before analysts will probably start changing their tune on it. Unless we get a massive surprise. Nobody knows about that, but we could also get a surprise. So where is this massive growth coming in? We talked about that massive growth, and it is primarily because of the data center. This grew by 427% year over year and 23% quarter over quarter. So the compute revenue was 19.4 billion, up from the 5x year over year and 29% quarter over quarter, driven by Nvidia's Hopper GPU computing platform for training and interfacing LLMs, recommendation engines, and generative AI. If you're into tech investing and if you have watched the latest earnings reports or a lot of these earnings calls, you might have noticed a lot of Mac 7 companies, especially Facebook in particular comes to my mind. They talk about that they are going to be increasing their spending on capex, which means that they are really focused on the AI revolution, focusing on the large language model build outs. Whether it's Microsoft, Google, Meta, they're all putting a lot of money investing into the LLMs, and Nvidia is playing a very, very big role in that. We also have the next generation Blackwell chips that will be coming out. From what I heard has been pushed out to later next year, and then they have the following innovation for the following year. We can clearly see that the data center build up will continue to happen, and it's not slowing down anytime soon. In the last month and a half, most of the analysts have reiterated their ratings, whereas we have one downgrade from New Street, which by the way they upgraded most recently on August 6th to a buy. Price target is anywhere between $120 to all the way going to about $165, $170, $180 or so. Anytime you are investing or trading during earnings, you have to know what is going to be the implied move during and after earnings report. So generally the option prices predict about 8.2% post earning moves compared to a 9.3 actual move. For easy math, let's say we will have about $11 to $12 plus minus that is going to happen based on the earnings report. In order to understand how the market is setting up for Nvidia, you can look at the options chain. So in this option chain, you can see that the put to call ratio for the next week expiration is about 1.08, which in my opinion is pretty neutral and there is not really much going on. But the following week, which is 8:30, and they report on 8:28, it's 0.58, which is highly bullish, which means the market is expecting Nvidia to beat the earnings, and that is the reason why you are getting the volatility is up to 74%. And you have about 576,000 call options versus only 334,000 put options. On the monthly chart for Nvidia, we see a solid trend up until the stock hit about $140. This is of course the post-split numbers, and a lot of this run happened because of the stock split news that came in. After that, we saw some sell-off and the stock almost coming down all the way to about $92, $93. And then we saw a very, very strong week last week with a solid finish with the stock coming up above $124. When we switch to a more daily view, we kind of see where the stock is trending and what we can expect in the upcoming days or so. If we draw our Fibonacci retracement and tie up it with the volume profile, at the current spot, this is where majority of the volume shelf sits. So we could see if we see an uptrend over here, we could see the stock actually breaking above the $130 mark, and it could test some new highs. So let's say if it does beat its earning, and generally the implied move is about $11, $12. So with that, we can see anywhere between $136 to $138, or if there is a surprise on the downside, we could see the stock price heading back to the $102, $103 level. And you can see that the buyers do step in around these levels. There was a gap up pre-split, and that gap was filled most recently when we saw that big drop in the stock price. So let's answer the question, should you invest in Nvidia before earnings or after earnings? Based on all the data that we saw, Nvidia is most likely and most probable to beat its earnings, and it will give you a surprise of over $1.2 billion. When you have a small account with, let's say, $500 to invest in Nvidia, if I were you, I would invest 50% of that amount before the earnings, and I will wait for Nvidia's pullback at a later point in time to invest the remaining $250. If you invest prior to the earnings, you have a potential to play the upside, as well as you have a potential to invest more in case there is a downside. If you are a large account and you can afford to buy 100 shares or more of Nvidia at one transaction, then I would recommend that you should look into selling options for Nvidia for 30th August. So let's say you can open one options contract, then I will target somewhere around the 30 delta, which would be close to $117. You'll get about 3.78, which brings down your cost basis to about $114. And if you can open multiple contracts on Nvidia, then I would spread my risk, where I would be opening somewhere around the 110, 115, and maybe 120. So I could have a mixture of multiple contracts at different levels. This way you are playing for the upside and the downside. And this is a great way to hedge yourself in case there is a massive surprise. So hopefully you got the answer whether you should invest before earnings or after earnings. And I also gave you a couple trade ideas in case you are a large account who can afford one options contract or multiple options contract. So this way you can hedge yourself for a surprise and have a very good risk management strategy. Let me know in the comments if you are a current Nvidia investors and what percentage you are up on your total investment. And if you enjoyed today's video, make sure you give us a like, click on subscribe, and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.